The National Insurance Clearinghouse, the marketing arm of Brokers Alliance, presents a Bravo special video event. March Madness, the Final Four Insurance Product in Review, broadcasting live from the All-American Sports Grill in Fountain Hills, Arizona, and sponsored by Legal and General America. And now, insurance columnist and talk show host, Steve SAVANT.
Well, with me today, I like to call her the Mensa of all that is morbidity, the lady of long-term care herself, Susan Carlson. Susan, I'm looking at long-term care. It's a player. We have to talk about it. If it wasn't a player, how come all these products are doing linked products, right? So let's talk about a couple linked products before you get to your Final Four standalone LTC. And I'm talking about State Life, or One America for all of us who are in the bigger picture. They have a product that has a linked annuity to it that really, when you're looking at annuity and LTC linked products, that is a top player.
Absolutely.
So talk a little bit about that product, then we'll go on to the next one.
The linked benefits annuity and long-term care is actually a very nice alternative to a client that might not be open to traditional long-term care insurance for whatever reason. And how these annuities work is they are based on an annuity, and should the individual need long-term care, they can then take withdrawals from the annuity, and the bonus is that those withdrawals are tax-free. So if I have an existing deferred non-qualified annuity and I 1035 it into one of these State Life products with gain, and this product pays out for long-term care, I'm never taxed on the gain.
So now that contract, if I remember correctly, is indemnification. Is that correct?
Absolutely. Well, you have two choices.
Well,
you can do indemnity, you can do reimbursement. They actually have a portfolio depending on your client or where the money is coming from as to which one of their annuities would be the best fit.
Well, that definitely is a player. We've been using it, talking about it. There are some major, and I'm talking major, competitors that we compete against that are using this as well, because it is a great product. So if you see 2 or 3 of these IMOs, independent marketing organizations like ourselves, selling it, you know it's hot. And I just want to touch on one other thing. The 1035 of gain that you mentioned, that is a huge issue, because now I can take that money, as long as it's for LTC indemnification purposes. I can't just go ahead and take it out for my own income.
Correct.
But if I use it for LTC, it's free. Thank you for the Pension Protection Act of 2006.
Absolutely.
Talk a little bit about, and this product has been around forever. It's probably the first linked benefit in brokerage, and it is Lincoln National's MoneyGuard. It's life insurance with an LTC rider.
Absolutely, and we're seeing these products becoming more and more popular, again, because clients are trying to get over some of the objections, what if I never use it? And these linked benefit life products are fabulous because it's a win-win for their client. If they never need long-term care, then the product pays a death benefit. If they do need long-term care, then it pays out a long-term care benefit. And the beauty of the MoneyGuard is it's absolutely guaranteed. And in today's times, that actually works very well with the clients. And the fact that I can get my money back anytime that I'd like. So I can actually sit down with my client, talk about repositioning some assets from their existing CDs, or maybe they have an old life insurance product, moving them into a MoneyGuard, and then letting them know every year we're going to sit down and review this to make sure it's still a fit, and if it's not, we can get all your money back.
So even if I had buyer's remorse 36 months out?
Absolutely.
Wow, that's a huge provision in the contract, and I want you to heads up. This is a way to get in. Talk about no obligation. This is a front end buyer's remorse. Hey, if you don't want out, if you want out, you can get out. I love the exit strategy on this.
Absolutely.
Well, let's get into the main body of what we're going to talk about today. Now, is the market, first of all, I just am curious, the market's really going someplace on long-term care standalone policies. Now, we're not talking about linked like we did the last 2 products. We're talking about your top 4 picks. And let me tell you, if Susan Carlson's saying these are the top 4 picks, these are the top 4 picks. Let's talk about your number 1. If you had to sell this to your parents, right, Susan, who would it be?
Absolutely, hands down currently would be Genworth Financial. Genworth has the longest history in the long-term care industry. They also have the biggest block of business and really know how to position and how to handle a claim. Also with Genworth, it happens to be right now, they are the most competitive carrier for couples. Not that it was planned to be that way. However, with the other carriers and the way that they've repriced their products, not only is Genworth extremely competitive, they have the history behind them to make sure that the claim is processed appropriately.
Now, so, but bang for the buck, how is their premium? It's pretty good premium?
Absolutely, especially when you're looking at a 5% compound or doing any type of inflation, maybe a longer benefit period, and also for younger individuals. Genworth right now owns the market.
Wow, that's a heavy thing to say because, I mean, usually not one carrier is going to own anything. But Genworth's a major league player, long-term care. We play with them big on the life side. We're just now adopting your approach on the long-term care side. So if you're looking into long-term care and you're looking at one of the top products in the nation, according to Susan, maybe the best product in the nation, you may want to look at Genworth. Who's number 2?
I would have to say the Omahas, whether it be Mutual of Omaha or United of Omaha.
Well, do they have 2 distinct contracts?
They do, but they are under the umbrella of United of Omaha, and very similar, and just some little different nuances that. So I like to compare them as
well,
one.
Let's talk about that.
Well, with the Omahas, they have a nice presence in the senior market, and they will provide a discount if that client happens to have a med sup with them, which actually makes the door, it actually opens the door to have that conversation a lot easier. They do have some key benefits on their home health care. They have different underwriting classes, and I think they probably have the best return of premium writer in the industry today.
Well, let's go back to your med sup. So if they have a med sup with one of the Omahas, is it United or Mutual or
Either
both?
one. Either one.
They would get some kind of a discount when they go ahead and buy their long-term care?
Absolutely.
Wow, well, is that discount pretty substantial? Because I know a lot of geriatric clients, our seniors, are buying med sup. That's kind of part and parcel for what you have to do when you get older. So are they, is the discount really that steep, or what's the combination?
It's a 5% discount.
Well, I'll take it.
But again, it's just a great door opener and a way to open that conversation.
Well, I think a lot of people, you know, we talked about when you're looking at things like ROP, return of premium. I think that's a huge issue. Is that return of premium rider costly?
It can be, and it is always paid upon death. However, there are different types of return of premiums where you could have one regardless of claim. So no matter what, when you pass away, this money that you paid into this policy would be passed on to your heirs income tax free. Another strong point to the Omahas is they have rate guarantees. So I could actually set up a 10-year premium pay, do a 10-year rate guarantee, and I have a non-can.
Wow, so that is extraordinary. And how far up the age group does that go? Do they offer that's the guarantee that high up? 75, 80 years of age?
Absolutely.
Wow, that to me is an anomaly. If I could combine my med sup, United or Mutual, I don't know which one we're talking about, but the Omahas could be a major play in the LTC just on the issue that most of us that are into 65 and higher, we're already buying med sup.
Correct.
I love that.
Correct.
Who's your number 4 pick?
My number 4 would be Transamerica, and I like Transamerica because of the several underwriting classes they have. They are also the only carrier left that has a single pay. So if I'm looking to doing some repositioning of assets, we can definitely look at the Transamerica product.
Well, let's talk about that for a little bit because we've been talking for the last 3 or 4 months on almost all the articles and blogs and tweets that I do that there's really, the interest rate market is so low. You're sitting there in money markets that are paying nothing. You're talking about CDs, even lockdown rates are pathetic, even for 5 years. So if I'm doing a single deposit into Transamerica, and I'm already going to think about, I'm going to have some long-term care, I already maybe have a family disposition for those kind of issues. I mean, this could be a major play, doing single premium. I'm done with it, right?
Yes.
It's completely done, no more future premiums. I'm locked into my contract, and I can pay this single deposit. Have you seen a lot of people going to this just because the rates are so low?
We haven't seen very many, but it does have a nice niche where I could do that perhaps maybe in a business type of scenario. Do it as an alternative to a Section 162 or bonus plan, where the corp would actually pay the single premium, put a return of premium, so that way if the executive never needs the policy, then that premium or that bonus is then passed on to the heirs.
ROP, you can ROP the single premium?
Absolutely.
Well, that's a huge issue. I think that's extraordinary because if I can go ahead and I can return it. If I don't use anything, I just need it later on, right? I mean, is that death or a certain time in the product?
It's always at death. Yes.
So if I don't use it, my heirs at least don't lose it.
Right.
Okay. Well, that's fair enough. Well, let's talk about. I want to try to now. We've talked about the combination. What I want to see is we know who the players are.
Okay.
When would I use an annuity LTC versus like one of these standalones? Or when would I use MoneyGuard, their life LTC, linked to LTC, compared to these four? Because some people say, I want to have the link benefits, and the reason I want to have the link benefits is because if I don't use it, I won't lose it. But if I have ROP on these others, at least my beneficiaries aren't going to lose it. So give me a kind of a yin and a yang. We're protecting our client if he doesn't use it.
Okay.
So which one is the strength?
Well, to me, it really depends on the financial portfolio of the client. If the client has existing deferred annuities, which they don't plan on using in retirement, it would be nice to take maybe one or two of those and reposition them and get a better leverage if they need long-term care. With the life insurance, that has a much higher leverage for the premium. So someone that might be open to life insurance, and it's really more around to overcome the objections. I don't want to pay this forever. What if I never use it? But to me, the ideal situation is to use both of them hand in hand. So I have an existing life insurance policy, move that into a MoneyGuard, and then sell a small standalone long-term care policy, either to make up the gap or to be your inflation protection.
Well, I'm thinking about that. It's an excellent idea that you could actually use two of these. You could use an LTC annuity, like One America State Life, in tandem with one of your standalones, right?
You bet.
Now, and I noticed that in One America, I'm wondering, because One America, that has a very long benefit period. If you want to really buy that longer benefit, that's pretty good. When do I know, should I go to a One America, if I'm looking strictly at the benefit issue?
Okay.
That's about, I think the one I saw was like 11 years. It was quite long. So when do I want to trade an 11-year annuity LTC like One America's State Life's annuity care, and I want to trade up? No, I need to go longer. When is it on that demarcation line of 11 years when I go standalone, or can I do some kind of potpourri or concert, buying this in tandem together?
Well, with State Life, they do have an annuity that you can get a lifetime benefit. So, it is part of their portfolio. So
if I do a lifetime benefit on their LTC annuity, is that better, bang for the buck, than a standalone, one of your top picks like Genworth?
I don't know. No, to me the best leverage will always be, hands down, a traditional long-term care policy. But if we need to pivot and look at other alternatives, that's when I would fall back on the hybrids.
I want to drop to your top four again now.
Okay.
When I'm looking at Genworth,
yes,
I'm looking at the as you call them, the Omahas, and I'm looking at Transamerica. I want to know, since they have a little anomalies, when I'm looking at the normal American in their 60s, pretty healthy. I don't mean perfect, but basically standard on a mortality table, and they don't have really any disability issues or any morbidity issues. Why does when do I know which one to pick? If you're sitting there, I know Genworth is your number one pick, but there are reasons why you pick these others. Is there any one reason that sticks out in your thumb where, I wouldn't go to Genworth because I'd look at these other three?
It would have to do with underwriting and different medical history. That's, Genworth has got some pretty definitions, clear definitions on what they will accept and what they don't take. So that would be one of the times that I might not look at Genworth, or it could just be the situation where I need rate guarantees or something, a single pay, then I would fall to my other carriers.
Well, I think that's a big important issue, because underwriting morbidity, oh my goodness, we're talking about, you think life insurance is hard to underwrite. Long-term care, when I'm looking at that. So if Genworth is a little conservative, which is what I'm picking up from you, if the client's really in great health, Genworth hands down. But if I have issues, underwriting issues, substandard issues, I need to start looking at that. That's what you're telling me.
Absolutely.
And the last thing is, I kind of like this single premium because, like I said, because people are looking, I get ROP on both the Omahas and the Trans, and Genworth as well.
Yes, but it's not nearly.
It's not as good.
I don't think it's as strong.
So if I had underwriting issues, I'm looking at those other three that are a little more benevolent.
Okay.
And I have ROP on that at death, so at least my beneficiaries are going to get that back, right?
Correct.
I love that. Well, I think sometimes when we were talking about combination annuities on our show a couple weeks back, I'm thinking about doing your idea called combination LTC, using annuity LTC linked, or maybe even life LTC linked with a major product. Remember, you can contact Susan. Her extension is 147 at 1-800-290-7226. if you want to understand the top 4 contracts in LTC, the definitions are huge. She understands the contracts, the imperatives, and can illustrate any of these contracts. It doesn't matter which one you're looking for. We're just kind of displaying the best of the best, because that's what the Final Four is all about.
Absolutely.
Trying to actually put inside the trophy case the best of LTC. Well, you've been watching the Final Four Insurance Product Review, our annual tribute to March Madness, sponsored by Legal & General America, your company for life. And you can download our 2012 Term Life Insurance Report at www.brokersalliance.com/March Madness.
You've been watching the Final Four Insurance Product in Review, sponsored by Legal & General America, Banner, William Penn, your company for life. This has been a Bravo special video event from the media division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance. Download the 2012 Term Life Insurance Report at www.brokersalliance.com/March Madness.